How does that song go? Get your money, get your setups. People, time is limited. Welcome back, ladies and gentlemen, to yet another stream for Profit Platoon. Yet another profitable day. Discord, jam-packed with insights. Things that bring you monies. And so, just to let you guys know, the session opened today over here was a great example of a small, tiny window that was profitable, and you could have taken this. But how would you know? How would you know? Let's say that, a lot of our people have left their fellow brothers, their soldiers behind. And they're no longer in the house of MarketSpy, but they're in the enemy camp. And many people out there want to learn how to trade, and they learn how to trade, but then execution and application gets in the way. And they're left wondering, what can I do to improve areas in which my approach to these markets is lacking? Or maybe everyone is such a genius that they watched a few episodes of Fill in the Blanks podcast, and now they got it figured out. They're like, that totally makes sense. My presentations are not the best, but the stuff that I teach here, the stuff that I have skin in the game, guys. Every time I post something to Discord, you see me follow up with a trade setup and an actionable sort of pattern that I myself take. Others don't. Or maybe they do, and then they later come in and be like, hey guys, did you see the signal? I mean, I do that too, because for you market spies, you need to be scolded if you don't see the signals and then you don't report back. That's just not the way it is when it comes to the pit and the mentality of trading with momentum. So signal feed channel on our Discord is something that you can keep track of. It's absolutely free. It doesn't mean it's cheap and devalued because of that. You actually have some pretty good insights into some shit coins every once in a while, but most importantly, Bitcoin, To this day, our logo for this server is a Bitcoin logo. And I think the asset is very accessible to a lot of you. It's 24/7, so we're kind of global about it. And I'm really curious if anyone is actually trading these days from our camp, because I only see like 2-3 people that are consistent with it. And so to improve consistency for everybody else, and to show you that this is indeed something that you can do without much speculation involved, I am going to talk about not the system, because I realize it's way over everybody's heads. Maybe it's too complicated, and it is, because you need to understand price action first. You need to understand what forms these patterns, what reacts, and I just don't think they're enough to not have, for example, a simple thing like the Asarnia chart with the CPR levels, with Ranger support and resistance levels. It is much easier if you have that. If you don't have it, well, let's start with the basics. And in today's episode, we are going to cover the basics. Where do we begin? So the first thing is Prada. The devil wears Prada. I like to forward test. I don't like to do candle bar replay. That's for market douches out there who do YouTube shorts and use market replay to show you how you could have taken this setup. Look what it did. I mean, they find it, they prepare it, and they hit the record button and they show you. I forward test. I do this live and I show you what is happening, what is developing. And so I hope you appreciate that. If you do, please hit the like on this YouTube stream, or if you're on Kick, leave a comment. Leave a comment to let the algorithm know, like, listen, this is helpful. So what is Prada? The 50% retracement technique that everybody knows about, but nobody really talks about two things, which is risk management style. As a matter of fact, you know, I've been curious of what makes a person valuable to the trading community, and I still don't have an answer, because people seem to be sharing their ideas or classic mean reversion strategies, and but they never talk about risk. As a matter of fact, when I see people entering their trades, they either use the same size all the time, as if, you know, that's all it is that's available to them, or they put their stop losses too tight, or they oversize when the stop loss is too wide. Also, I should be recording these videos and not doing live streams, but I think live streams are more profitable for you, because not only are you looking at a chart without us having to go back and do bar replay, we can kind of slightly dip our toes into the future and figure out if this is something that is looking like a trading setup that's developing that for you to participate in. So that's nice. The other thing is I lock in, you know, Asia session morning started over here. The open was this candle and it went down. And as soon as it went down, I said, well, this is weekly support. We haven't really we haven't seen true bearishness from Bitcoin. This is healthy. This is just a correction. And as a matter of fact, if it truly wants to, and there's this hunger in the market, if people step in over here at this support, this thing is going to fly back to 114. Okay. So on the way to, let's say, wherever it is going to fly to, on the way to 114, since this is a weekly support, to get to 114, right? I'm just sharing like the thought process here, because many people don't. You have to be, it's vulnerable, right? You have to be vulnerable in order to share that, because what if it doesn't do what you say it's going to do according to your strategy? Well, I have full conviction in my strategy that's been profitable for almost generations now, passed on in the oral traditions of the greatest range traders ever. But I will try to do my best to explain to you why you are most likely wasting your time applying 1,000 different things to your trading chart. And I'm not talking about systems. Now, there are indicators and there are systems. MarketSpy is a system that, instead of calling it indicators, we call them modules. And each module, like DSR, Armageddon, and MSX, is responsible for its own set of parameters and things that it's monitoring. And discretion comes in when all of them start jiving together. You have to make that call. You have to pull the trigger, and you have to know where the stop is and what your contract size is going to be. And it's as simple as that. For the past 5 days, I have been posting setups and sort of like showing you what to do. And the whole last week, even though it was bearish, we were falling and falling and falling. There were actually many long profitable set, like this one, for example, from yesterday at this support to the next resistance. That is something that, oh, Maxitor, thank you for the follow. On what? On that was on Twitch. Yeah, we're still live on Twitch. Not monetized anywhere. And this video is going to be banned and restricted from being shown in many countries because sorry, got an answer. This guy's asking, is Bitcoin about to go up? And I'm like, give me a second. That second will last 2 hours. And that's what it takes to prepare. You cannot just be an oracle and see it all. You have to be accountable. And you have to be responsible for what you share out there. So I have always taken our trading approach seriously. I ease into it, and I have fun doing what I do. And I hope my traders, my followers, also feel the same way. They can appreciate the don't take life too seriously. You know what I mean? And don't take markets. This is an extremely serious, life-changing decision if you decide to pursue this and trade it. But you have to commit. You have to be loyal to the plan. You have to not deviate, and you have to keep grinding. You have to keep trying, preserving your capital. From day one, I have been talking about that before risk management became a popular word. I pushed for sizing. I created tools to help people size appropriately. I created spreadsheets, calculators to help them understand volatility and also leverage, because a lot of people get into trading without understanding what leverage is, what it costs, and what it can pay. So yeah, really hard to kind of pinpoint what where the value is for an average like beginner. But so I thought of the, like I looked at these videos and I realized that people need a simple, so nobody wants to think. So very few thinkers out there, and that's great. You know, I wish I didn't have to think, to be honest. I wish I could just you know, just be on autopilot. But I don't like, you know, I like thinking. So I want it and I don't want it, kind of there. So on YouTube, all the content that you come across is highly, you know, engineered, I think, or at least it feels that way to me. It's extremely engineered, where you have people present ideas in a broad scope, where a lot of the comments, for example, if you go and read the comments, they're like, yeah, but what do I do exactly, specifically? Like, you're saying all these things, you're talking about liquidity grabs, volatility, you enter here, and you're simulating what would have happened if you were looking at the chart 20 days ago, right? Forward testing is difficult because we cannot speed up time into the future. We can only rewind. And so I guess for content creation, rewinding is great to push out content, because you have unlimited setups that were cherry picked from the past, and you can just kind of sell yourself using that, sell your ideas. In our case, you know, I'm kind of anti-trend. I don't like doing what others are doing in the space. But that is hurting, because that is something that maybe it's not entertaining or something. I don't know. These strategies are boring. because they always work and there's nothing to talk about. It's either you're gonna profit or you won't. And what happens when you don't profit is you lose a little bit of money, and that is also another thing that you have to deal with. How do you deal with it? I had a loss a few days ago, $36. Because what I do is after an entry, price runs up a little bit, I always go for a break even. Or sometimes when I don't have the space to go break even, I exit at entry. And so that results in a little bit of a loss. So depending on the fee and the size is always different. I don't control the size. Sometimes I break the rules and I oversize. Because, I don't necessarily have to aim for the stop that is way down below down there somewhere, But also maybe this is okay. I talked about risk to reward ratios a lot of times. And I think people are missing the point completely. I don't see anyone doing anything in the markets, to be honest. Like at all. And so I think that's a little too complicated for people to realize that your average entry, what the 50% level is all about basically, is your best bet at capturing a quarter of a move, because you're never going to grab the top or the bottom unless you have a system, like I said, like for example here, boom, bottom, top, easy. But in most other cases, when you don't have visual markups on your chart and you're just holding it to the previous pivot high, it may or may not happen. I don't care what they say about liquidity, schmiquidity. I guarantee you that if collectively all traders are fearful and all retail is just like thinking this is the end of the world, there's nothing that none of these sailors, banks, or whoever can do to push against retail pressure. I think people give too much credit to those who hold power and wealth in the world. I think you're idolizing them by doing so, by saying that the markets are in their favor. You're way off. They're not the enemies. They're not out to get you. They don't really have anything that they can get from you. But collectively, retail have been known to be pushing like these game stops if they want to. It's just consensus is hard to reach. People are a little bit selfish these days, where it's a principle thing where they don't want to agree just because it's a principle thing. It's like my style is to never agree. There's a thing like that out there. But sometimes an anomaly happens where Discord, everyone like for example, if Discord can do so, sorry, not Discord, but Reddit. If Reddit can actually get into this collective wave of pushing price up and identifying that, hey, there's a short to long ratio is extremely bad over here. Why don't they do it every day, every other week? Why is it hard to find those bad Bath and Beyond companies or the like? I think there's a ton of them. But there needs to be consensus, so that happens organically, and that's why it feels random. That's why you never hear about it until you hear about it on the news, on CNN, and everyone says that, oh yeah, the biggest retail rally ever. Now, how did they come to this conclusion? I see family members and friends miscommunicate all the time, and that creates issues and drama in the family and the circles. Because silence is that's the killer. If people don't discuss, if they don't negotiate, if they don't talk about things, and even in business, everything goes to shit. Everything fails. So you have to reach out and you have to share. And when it comes to markets, people think that they have found like this cheat code to maybe press a few buttons and make some money, when really it's always been a team sport. I don't see that in our Discord. I think that the people who are idling should just fuck off from our Discord. I don't know why they're idling in there. I'm not going to be the one kicking them out, but it's like, what is your point? Why are you there? And market spies have been extremely lazy and non-reportive lately as well. They're not reporting anything at all. So many trade setups, very exciting stuff, but for some reason it's just not clicking. So I'm moving on to beginner strategies where I'm not even going to be showing you MarketSpy. Discord is going private. You can leave, but you'll never come back. And what I'll do is I'll make sure that the vast majority of people leave until I'm left with those who have a little bit of brain left, or see an edge here, or see the alpha, and I'll work with them. Because whether I have the community or not doesn't really matter, because I do this for a living, and so I will continue to do this and publish it because I love doing it, and nothing really depends on how anybody else feels about this. So there. So now that is something that I have been struggling for a long time, because I was like, I shared my system, which a lot of the fuckers out there, and they are natural born fuckers, didn't deserve it. And I undervalued the whole thing from the get-go. And those who found value, I'm forever grateful, because the mission was to put them up on their feet, make them run with it, and so now they're doing their thing. I don't care. But most other onlookers, they're kind of like just there. I don't get it. But the strategies are so sophisticated and complicated for an average statistical trader that I think having smaller sort of line-based, like these splines over here would be much better for an average person to grasp the concepts that I'm talking about. And I have to admit, I myself have been using this to my advantage, because there's a little bit of alpha and an edge that I have to keep to myself to sort of make my decisions. But I also understand that if I share it and I don't get the feedback, someone out there with a bigger account or following who's closely monitoring the system, we've had those occurrences before. The case of MAX7, there's a certain famous indicator that people are still buying like a bunch of fucking retards. But anyways, I guess they love losing money. This is what makes 95% of the world losers when it comes to the markets. So there's nothing you can do about that. So you either join the winning camp or you stay chasing. You stay chasing the fucking dreams, the setups, whatever. And yeah, the numbers are very realistic. You're making $200, $500, $700 a day. You cannot. People would kill for that. But that's a whole different story. What I'm admitting to is the lack of a simplicity targeting beginner noobs. Absolute, like, clueless people who want to get into this, but I'm afraid that they might get onto some concept out there that may or may not work for them. So I'd like to offer my point of view as someone who has been doing this for a very, very long time. I don't even have the count. 15 years. Something like that. But today we're going to talk about the house of MarketSpy. Now, these are internally named strategies, the equivalent of which probably exists somewhere, that some schmuck came along and named it and said, yeah, this is the head and shoulder. Like, who the fuck are you? Head and shoulders. What if I call it a inverted dick? How about that? What head and shoulders? You want to be polite about it? These days, you cannot say anything. YouTube will ban you for saying certain things, like what I'm doing right now. But I just want to prove the point that none of this matters to me, and I don't really care at all. What I do care about is I want to find people who will look at these setups and say, holy shit, this is more than usable. This is profitable. And so we're going to get into one of these setups right now, called the House of MarketSpy. Live streams are for the people who are actually at the charts. Anyone who wants to come here and replay things, you know, it's great if you're sleeping through it, but you have absolutely no fucking excuse to be sleeping on the Asian session, which is one of the strongest next to New York, literally. So you're sleeping on the money while I'm posting profitable setups every day. Every single breathing moment that I wake up and I look at the charts, there's a setup. And I want you to see these things because it'll make your life easier. So first of all, we have to talk about risk. And let's have a conversation in the chat. What is risk, guys? Can somebody answer me this? What is risk? If nobody wants to engage, I'll just fucking shut this fucking thing down and I'll sign off. What is risk? Can anybody tell me? There's a clear definition. It's like passing a quiz where you have to have your answer like, bam, there it is. And there's no, it's not like there's many ways to answer. There's only one way to answer it. That's good. Nacho, risk is what you're willing to lose. But what determines what you're willing to lose, aka risk, is the distance between your stop loss and your entry. So it's the difference between your entry minus your stop loss. And that difference in dollar amount, ticks, pips, whatever chart you're looking at, is what defines your ability to basically assess what it is that you're going to lose. So I'm just gonna do a paper trading thingy over here real quick, right? And I'm gonna show you this thing. No, not this thing. Hold on, I'm holding the microphone in my hand. Let me just put it off to the side over here. There. Okay. So let's start with that before we get into the strategy, because this is so profitable. You'll be amazed. I think you'll be amazed. Nacho, honestly, as one of the recent people who have discovered, as you know, I don't market. I don't advertise, and people organically discover, and if they like what they see, they stick around. But I'm going to dedicate this specifically for you because one person is all I need, honestly. More are welcome, but one is where it starts. So I'm going to show you this and try this at home. So here's the order. So for example, we see this candle, and some may argue that this is bullish. Let's say you learn that what bullish engulfing is, and you're like, this candle basically exceeds, the body is higher than the previous red candle. That's it. That's the bullish engulfing. And so we're working with the limit order, and we want to buy. We want to buy here for whatever reason, right? And this is just to demonstrate that you can be wrong and you can be clicking buttons randomly, but this is how you protect yourself. So the account is worth what? What do we have in our paper trading? 26,000? Not good. Let's reset. Let's make this 10K. This is a good starting point. And that's just a round thing. So we have take profit. We identify where we want to take profit. This product line over here, we want to take profit over there. And we want to put our stop loss. So the stop loss, we're not going to use ticks. In TradingView, there's different parameters here, different styles of stop loss. So percent of price, if it drops down by 5%, that's where we want our stop. This is totally unnecessary, but it's a new thing. Risk, USD will say, well, I don't want to lose more than 5. So the problem with this, if you put USD and you say, I don't want to lose more than $100, which would be 1% of my $10,000 account. I don't want to lose $100. And suddenly it puts the stop loss you can see where, let's bring the ask. So we want to at 0. So if price moves down by this much, you lose 1% of your account. This is stupid. This is not realistic. This is not how you make profits. So risk is not based on you saying, I'm not willing to lose $100, because this determines the contract size. Yeah. So the contract size is whatever it gives you. Where's the contract size over here? Oh, it says it's one unit. So that's the whole price. That's like 1 Bitcoin, and we cannot be having that. We need to fractionalize. We need to drop it down to whatever, right? So 100 USD would be. This is wrong on Bitcoin, anyways. I don't know why it does that. No, it's correct. 1 Bitcoin. Sorry, I'm being confusing right now. We will say good till canceled for the day, and we're just gonna drag our stop loss to like down here, the candle, and we're saying, okay, if price comes down over here, you know, now suddenly you look at your contract size and it's 0.09 Bitcoin, whatever that is, and so that would be the equivalent of price falling here. So you have a small contract, but also your take profit. So the difference between your stop loss, your entry, and your take profit is risk. This area is risk. When we say big risk, we're actually talking about a small distance. When we say low risk, we're talking about a huge distance over here. That's the proper professional way to talk about risk. Unlike people who say our risk is too great over here. It's only great if you're oversizing. You understand the problem with these YouTubers? They will tell you, and they're like, I'm not gonna name names unless you want me to, but there are names that say, okay, this risk is too great. Like, let's say we have, you know, if price breaks our trend line over here, because it looks like we're trending, and it is true, we're trending right now. But if we break this trend line, we don't want to put a risk over here. So what we're going to do is we're going to minimize your risk. We're going to put a stop loss right here. You actually just increased your risk because the risk doesn't mean you're losing money. Risk means you are risking getting kicked out of the market. You see what I mean? So language, rephrasing everything, using appropriate terms that are Wall Street native. That kind of understanding is lacking in this space because professionals are far and few in between, and they're just busy. They're just busy trading their family funds or running their hedge funds or offices or whatever. Nobody monkeys around like me doing this, you know, for nothing, for free. And so what you have over here is this terminology where your stop loss is too close to price. It is risky because you're risking, forget about losses, you're risking being flat. Okay, you're gonna get kicked out of the market. That is the risk. And by doing so, of course, it comes with a loss. Because it's a risky trade, you're going to lose your position faster. So when we're talking about a wide area distance, so imagine this is a, I don't know, weekly chart. Each one of these candles is 1 week worth of candles. And imagine you're placing your stop loss over here. That's a $20,000, $30,000 plus distance. You need to have a few millions tucked away in order to make $200 per day. Per day with that kind of stop loss. And if price decides to go towards your stop loss, yeah, if it decides to go, and imagine we're looking at a weekly time frame, weekly. Each one of these candles would mean that you would have to be sitting in a flat, non-tradable underwater position for 11 weeks while I'm posting trade setups every day and making money every day because of this understanding. But if you were to follow like the classical sort of risk rule over here, is your stop loss here, but that gives you a very small number of contracts. So you stand to make $23 over here. Is that it? If price goes up to here, but you stand to lose $100. So your risk to reward ratio is indicated over here, the reward and your risk. So you're risking 1%, $100 in order to make, so it's 0.2 to 1 risk to reward ratio, essentially. Yeah. And so let's just meditate on this, right? So what do we do? On the one hand, we cannot, I mean, is it worth it? Maybe if you want to build your equity line and show people, for example, I'll give you a cheat code to hit rate, win rate. You can increase your win rate artificially. I think win rate means nothing, and I'll explain why. You can increase your win rate if you put your stop losses at unrealistic levels like this, but you time your entries with a single dollar exit. So Bitcoin moves by $1, and let's assume that the fees are taken care of, right? But like whatever, to break even. Let's say it's a winning trade and you make 2 cents, 2 pennies, or 10 cents. Let's say, then you can inflate your win rate, and then you can take a screenshot of that or whatever and share it to the world as a fucking influencer to influence people and say, by the way, get your kids away from the screens, from the monitors. I'm at liberty today to get the point across. So you make those 10 fucking cents, and you can find a setup blindly to make 10 cents every day. You can literally, because if you're risking this little, but your hit rate is gonna get to like 98, 99%. Because that stop loss is never gonna get hit, and all you have to do is wait a while until that one trade bumps just a few dollars above your entry so you can exit, and that's a win rate. That's like you're winning more than you're losing. But are you making money? Are you able to post a $200, $500, $1,000 profit every day or every other day? This is where we want to get to. And so starting from this risk, now that you know that win rate is an absolute joke and everybody uses it as a tool to manipulate and skew views and perspectives and opinions in favor of the fucking influencer, I need you to forget about these fucking influencers, okay? That's the first thing that you need to do when they show you things. Because it's about understanding how to trade and how to look at the markets. That's why things like ICT with his convoluted smart money concepts shit is actually useful. It's just you're getting locked into the ecosystem out of which you will never come out alive. Never. It's gonna take you years to get to what I'm about to explain to you right now using smart money concept. Isn't it funny how smart money is being used by dumb money and the smart money never talks about it? You have to really, really process these things and understand that you're surrounded by scumbags, okay? They have no interest beyond monetizing their videos and making millions of dollars based on views. Get out of my face if you're sitting here with your skepticism. I'm about to shatter it. Risk to reward ratio is determined from your entry. And so I always say 1R, 1R. Why 1R? Why 1R? Why not 10R? Why 1R? Why take profit at 1R when you can hold? So first of all, let's determine this. Are you intraday Or are you a swing trader? If you're a swing trader, you go for a bigger R, like 10R, to make it your worthwhile, because you're gonna be waiting, let's say 10 days, and each day, if you're correct, each day price will move by 1R in your favor. 10 days later, under perfect conditions, you get your 10R. For example, right? Let's just talk about this. For example. But as a swing trader, you have to really time your stop losses, and you have to, if you want to be tight, if you want to put your stop loss over here and try and price takes you out, and you try and price takes you out, and you try and price takes you out, and you try and price finally holds, and now it's going up, and now you have your 10R. Guess what? By the time it goes to that 10R, you're probably going to be barely break even from all these losing trades, all these attempts that you have made to get to that 10R. What I'm trying to say is that there are no shortcuts in the market. The market works if you make it work, is what I'm trying to say. And there will be, every strategy has its downfall. 1R, on the other hand, gives you a solid objective data pool measurement system that tells you, as an intraday trader, if you're looking at these setups and your entry is somewhere around here. For example, let's say you had this candle that pumped up. So pump candle, bullish. You go ahead and measure the low of this candle to the high of this candle, and you get Prada. Check this out. You get Prada. 1R means you threw your stop loss at the low over here. 1R means you took your profit as soon as your entry from here to here was hit, which is the top of this candle. We'll mark it like so. And you exited right at the peak of this candle, and you got your 1R. Now, let's imagine that we were to buy here, which, you know, you could have easily. That's your Prada right there. It's Prada or nada, you already know. And your exit is right here. And your stop loss, let's bring this guy over here, is below this candle right here. So that's your 1R trade. Now price is going to chop, price is going to do whatever, but you have secured a $100 trade versus a $100 loss based on a very specific, correct system of entry on a pullback to a bullish candle. But how do we know that this was going to go up? I'll explain in a minute, because this is repeatable. This is what you're zoomed in. So as a day trader, as a scalper that turns into a 4-hour bag holder just to get to his profit point, 1R is what the algorithms would do at most. Scalping. High frequency trading firms do not hold their positions. High frequency trading firms get in and out at volatility. They look at your best bet is ATR, average true range of each and every one of these candles. And have the ATR at Prada, at HC, have the candle at a 50% retracement level, which is not part of a Fibonacci line. So you're not using fibs. Fibs is those other divisions. The original Fibonacci does not include 50%. So 50% is a psychological discount. And why is it called Prada? Price reverses at demand area is one of the definitions of what Prada is. And I love it. And how can you not? So risk to reward ratio is right here. So the problem then, we were like basically focusing in on how do you execute. So now that we understand leverage, okay, how many contracts? That would have given you 0.3% Bitcoin. What happens if you break the rule and you say, I want to risk, even though it's 1 hour, I want to make $1,000 and risk $1,000. So ticks, you'll put reward USD. So you will put, I want my reward to be $1,000. And this is arbitrary, this is random. It is not backed by levels. It's just like, once I'm up by 1,000, wherever that is, I want out. And it goes, cool. That's going to be up here. But you're like, yeah, but what if I'm willing to also, this is a great risk to reward ratio. I'm willing to lose $100, $200, but I'm willing to profit 1,000. Wow, that's great. Are you holding this? Now you're essentially becoming, this is a 10-hour trade over here. 8-hour trade. And you could totally get away with it. But do you want to be sitting there and waiting? With $100 of a loss, that's a great setup. But let's say you increase the unit size. You also want to lose only up to 1,000. Now your stop loss is here, but you're like, yeah, I'm going to bring the stop loss over here and I'm going to risk $1,000 over here. So now we have, so this is the proper way of doing this. I don't know why it's jumping all over the place. Look at this. So now you're risking, you're given the trade size, I'm sorry, at 1.7 Bitcoin. Wow. That's almost 200K. You only have 10K in your account, but you're buying leverage. You're trading with $200,000. You're trading with $200,000 almost. Okay. That's exciting, but is the stop loss acceptable? If you lose 1,000, you're going to have to make more than what you have to make 2R to get it back later with smaller size. And if you lose that, so basically we narrowed it down to, once you learn the risk parameters and what this translates to, I highly recommend you play with this trading panel to visualize. MarketSpy is a highly visual system. Discretionary traders need visual tools like painters. We need to see in order to act. Use this panel to visualize. And visualize you will, because this gives you a clear understanding of what is what. Now that is assuming you bought here. But let's say now we have to narrow it down to, sometimes what I do is when I see a great setup, and what makes a great setup. Now we have strategies for that. Strategies allow us to build our army, build our leverage beyond your wildest dreams. Not really, I'm exaggerating. But we can take more risk and not even worry about the stop loss. For the beginners, you need to understand how this works, what you're risking. I always say that you sign the contract, once you enter, you sign the contract with the stop loss and say, it's acceptable to me. I know the consequences, I'm willing to deal with that. You don't think about the reward. But preparation is everything. And so half a candle entry is always a good idea. Now confluence is everything, but now we narrowed it down to, now we understand leverage. We can actually look for perfect entries. No such thing, but we can make it as close to perfection as we can without overcomplicating things. So you're not looking at GPS dots or anything like that, but you use this, like I said, as a professional trader. In the beginning, you don't need all of that. But as a professional trader, you are using the system and indicators to tighten, to add to your edge, essentially. Retail traders who start this on the wrong footing follow the advice of others and say, yeah, I'm just going to put a stop loss right here because indicator says this, or the indicator says buy, So I'm buying it because it says so, without any sort of structure of risk to reward. So, House of MarketSpy. I'm going to show you. So Prada is possibly the best indicator system that you can have to time entries. It gives you plenty of space because remember, with something like Prada, once you have a bounce, you don't necessarily look for the previous low as your stop. You can put your stop right here as price is progressing, supported by momentum. And this gives you a small window of only, I don't know, like $400, $300. And you can make your 10R using these 3 candles over here. This is what it would look like. And this is ideal, but this is what it would look like. You would have your stop over here. You'd have your entry. Let's drop down to a smaller time frame. You'd have your entry over here on this candle. You'll have your stop loss at Prada level. And you can scale this up to the previous peak, which is right here. Like so. And you got your 1.5 risk to reward ratio. You can go all the way up to here, and now you increase it to 3.4 risk to reward ratio. So the problem then is, how do you find entries? And how the hell am I doing it every day? Posting it to Discord. I keep calling out these levels and I show you the techniques. And there are things that you have to do correctly instead of like what everybody else is showing you. So the most powerful tool that you have to your advantage here that you can take is your ruler. Click shift on the keyboard and then click on the chart and drag your mouse. Why ruler? Because ruler is Prada. Ruler is all that you need to get your perfect entries. This whole move, you simply wait until price comes down to that 50% retracement. And then you simply wait for price to go up to the 50% retracement of the down move. Make sense? This is classic. Everybody knows this. This is not some hidden information. I just called it Prada so that the acronym, this abbreviation, would ingrain in your mind. So that's what you're looking for. What is happening? It's a very descriptive sort of thing. Price reverses at daily average, or demand apex, or price respects average daily apex. You can call it whatever you want. On my Twitter, I said that there's many definitions for it, but it perfectly describes what it does. And so if you were to only use that system pivot to pivot, sometimes it doesn't work. Why? Well, let me explain. Let me give you like this example, for example. Let's say that you have a pullback. So just drawing 50%, that would be easy, wouldn't it be? 50% line, you would think like, okay, well, it bounces, it has to bounce, but how do I know that that bounce is valid? So for that, this is when you start using indicators, because at the 50% point retracement from the peak to the valley, you're up to here. And imagine for a second, let me actually put the Prada level down here for you guys to see. Okay, here it is. And you're like, I'm gonna put a limit order to short this 50% retracement because price is supposed to, according to what everybody else teaches you, to go down from there, right? That's the ideal scenario, except price doesn't work this way. It doesn't move this way. So how do we know to avoid this fucking area over here and instead go for this red? Like, where did that come from? What is that? Why is it not 50% of this move down
to here, and why is price keep going up? What's going on here? You look at your momentum and you say, at the curvature of the long-term trend flow, when this thing is white, when this thing is blue, when it is green, when the freaking lightning is in the bullish area, this is bullish, this is bearish, this is neutral. When it's in the bullish area, right at the peak, do you think price is going to reverse from here? No, it's got momentum. Momentum is, this is a corner, car is going fast speed, hits the brake because it knows the corner. But here it hits the brake and it drifts before slowing down and accelerating again. This is what momentum looks like. This is what this thing is, okay? So by using momentum, we can say that it is too strong and it's too early. This 50% retracement is baloney. Everything that I have learned doesn't work because you're getting liquidated if you were to simply put a limit, resting pending limit order over here to try to reverse this price according to the gurus. With a momentum indicator, you can see that our bars, confirmation bars, are full here. There's no way you're stopping this train right now. Bruh. There's no way. So what you can do then is you can put on Armageddon and see what's going on over here. And you're like, geez, we just reclaimed the baseline. Why am I going to short this level? I can't. There's no signals for it to be short right now. It's transitioning into a bullish candle formation, which we did get over here. So, now we're thinking, okay, Armageddon, MSX, Confluence, it works. This level, like what people teach you classically, doesn't work on its own. So how do we draw that perfect Prada that will earn us that bag, that Prada bag? So let's get rid of this and let's look at this red line over here, because you're like, that's not 50%. Where is that coming from? And I will tell you, my friend, when we were at the start of a session over here, this is London, okay? And the London session was as such. This was the swing high of the last Tokyo session, and this was the swing low. So from here to here, again, if you were to buy here, price is chopping. You're not getting it. From here to here, we can measure it like this, and that doesn't work. Or we can actually wait for the London to reverse. Now here's the reversal. We have momentum going up. So now we know this is the true swing low. Starting from here, all the way up to the previous swing was right here. It held once, maybe twice over here. You got your entry. And it's still valid because this is essentially, if you had a profile, market profile, there would be absolutely no difference how this would look. Market profile would look like this. This is the most traded, highly liquid area. I don't care about market profile or anything like that. We have it available too. It's the best market profile indicator, custom created for MarketSpy. But if you're using market profile, do you really need it to see what I'm showing you right now? The consolidation of these candles, and that there's a clear level here. I'm gonna do this. I'm gonna go ham on you. There's a clear level here that is highly liquid, deep, traded. It's not 50% of this freaking retracement like the gurus will tell you. You're gonna get wrecked. So we refer to the previous historical Prada levels and say from the session swing low to the swing high over here, London, and before we start retracing, this is where price reacted, this is where it rejected. So this is where we're going to come back to and sell at. And so if you were sitting here, check this out. If you were sitting here and you're like, okay, now that we're here, do we have this consistent progression? So first of all, a wick like this, a long wick, is demand. So they're demanding this premium on the price to sell into. And so demand is always a wick. Now, I have always said this in my videos, in my educational content, that you have to put your stop loss right here. Right here. Right here. Yeah, you get stopped out, but I'll explain what this is. Because that was a profitable trade in itself that I posted about. I talked about that and I shared it on Discord. So anytime you see a visual wick, you have your ideal stop loss placement. Tiny wicks. This is I'm lying. This is not, you would not use this as a wick for a short. You would have used this if you were to go long. This would have been like an indication of demand. However, momentum is bearish, so that is invalid. So anyways, these wicks is what gives you a perfect sort of stop loss area to gauge and say, oh, this is what it's looking like. So it's stop loss. So now that we have the 5 candle rule that I have, market spies know about the 5 candle rule. Natural 5 candle means if we have 5 consecutive candles with lower highs, that means we're being exhausted as buyers. So over here we have high, lower high, lower high, lower high, lower high. So there's 5 candles in here that are actually lower than this candle here. And this shows us an exhaustion point. And we go back to now the 50% move of this move is valid, because if you throw your Prada over here, you get your perfect entry. The wick is there, and now you're like, I remember CR saying that if there's a long wick, it's a safe area to put a stop loss. And you're like, that's perfect. And I'm gonna go back and sell this into a 50% retracement point up to here. So you're zigzagging your way through inside of a range. And once that initial first move is going to be the resistance zone for the rest of the session, for the rest of the candles to come. So bang, 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 unable, but willing. The spirit is willing, but the flesh is weak. That's what you're looking at over here. And it's not able to. And so you're like, man, this is perfect. Even now, are you kidding me? Even now, we're talking all this trash here. Even now. Though you don't have the 5 candle rule because you're on a 5-minute time frame. If you were over here, for example, you would have seen. So anyways, that's Prada. I hope Prada is clear. Play around with it. Play with small sizes and see how you like it. Prada must be confirmed with momentum. It must be using tall wicks as a stop loss area, because that indicates demand at the 50% discount. The discount is being real. 50%, you're like, yeah, that's, the market wants it. And now, if you're still here, I'm going to show you the house of MarketSpy. And today I used it because I just had no idea what momentum was doing over here. But I used it to play this pattern over here to the upside. And I captured this bullish candle at around this midpoint where the Prada is, and I sold it as soon as it went up to clear its previous high over here. So this is how I did that, and this is what it looks like. Now this is very specific to MarketSpy. I'm going to get rid of all this. It looks pretty, but I'm not married to these chart patterns. We get plenty of them. MarketSpy gives abundantly, so we're not stingy with information or whatever it is that we think we're lacking. We're lacking nothing. This is the house of MarketSpy. Where do I begin? Are you guys interested? Do you even want to know what that is? So first of all, Trend Runner. If you want Trend Runner, it can really help you guys. Trend Runner, for example, right? Is based on the house of MarketSpy strategy, and I'll show you what that is basically. But let's just take a look at what occurred over here, the breakdown, and this is an indicator in itself, which If you want MarketSpy Trend Runner, I can. No one's asked before, but I also never showed it, but I've been using it forever. And it just gives me these quick areas to understand. And it's slightly different. It looks like a laser show. Please do not judge it for the looks. It's actually very, very effective as a trend line hunter because it's a little different to your typical connecting the highs and the lows sort of thing. And there's a method to this madness, but it's a hidden pattern revealer that most end up not seeing because they're using the classical support resistance lines, which may or may not play out. This is most likely at all times is going to be a profitable setup once you have a breakout or resistance on it. So it's very accurate. And by the way, what price is doing here, interacting with this previous line, doesn't matter because what that was this signal right here. So whatever happens later, it doesn't matter. It's once the start of the line starts to seed, where we're using a seeding mechanism. It starts to seed the line to watch for a fragmentation of the candle to find an unusual high and low structure, for example, to project that wall into the future. And that's what we're dealing with here. So Trend Runner is Nacho says yes, got in early, yes. I'll give you guys access, just the two of you, so you can play with it. So, House of MarketSpy, ladies and gentlemen. Let's take a look at a pattern that is very often overlooked, never talked about. And I'm not sure that I'm the original inventor because this is something that I have been using for a long time. I've been taught this. It just didn't have a name. It's just, I was taught to look for this pattern. But when producing content, education, you need to give things names. So in math, BADMAS, right? Concepts like that for you need some acronyms to because it takes too long to say the high low relative to the previous swing pivot point reversal blah 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 at this level of volatility and ATR. It's just too much. So we just say Prada. We just say home, House of MarketSpy extension. Home, ladies and gentlemen. And why is it called House of MarketSpy or home? Because I'll talk about this point that made me money today without using any of the indications from MarketSpy, the system itself. I used this manually because I just didn't have time. I wanted to trade the Asia session, and that's exactly what I did. But I'm just gonna draw things, and you tell me in the comments if you see what I'm trying to do here. Okay. Pay attention. All you skeptics are going to be converts. What is this? Do you know what this is? Oh, wow. This is nice. This is nice. I mean, make a comment and tell me, it's a house. Please, I need to know that we're on the same page. Because we're going to move this thing and we're going to overlay it on top of price. And it shall open your eyes. The barn, very close. Travis, not only is it the barn, it's the farm that you're about to start betting on these kind of setups. And you're going to make some money. It's the farm, the barn, the house of MarketSpy. HOM, short for home. House of MarketSpy. With an E, maybe. As an extension, because there is an extension, but usually there isn't. Okay, so now that we see this little house, I want you to forget about the floor that we will use as support, the range and the distance and the depth that we will use to qualify or quantify our intraday structure. And I want you to only pay attention to the roof. There's also going to be a chimney. A chimney is going to be your stop loss. Bear with me. This is a lot of fun. It's actually based on the mapping of demand and supply zones. But I gave it a name because, like I said, I need to be able to teach these very basic, simple sort of concepts. Let me have a cup of tea before we proceed. Because I figure everybody else is selling you some trash, and I don't want you to get caught up in that noise. Perhaps this house is going to be so valuable that unless you see it, you don't do anything. If you don't see a house, you don't do anything. So what does a house look like? We will start forward testing, but also back testing. I want you to, and by the way, we will not be able to select our we will not be able to force a roof if it's not there. That's the beauty of it. So basically, you cannot cherry pick this and say subjectively, like, yeah, this looks like it. No, it's either it's there or it's not. I'm gonna keep going until you get the picture. It needs to have a roof. All right, first of all. Now I'm gonna show you setups like over here, for example. You don't necessarily have it, but you do have something. You have this is the chimney that I was talking about. And that chimney is going to be used for our stop loss area. And the top of these houses, the rooftops, is going to be used as our stop loss areas. The top of the house is where you put the stop loss area. This is based on for example, there's no such pattern over here. Now you could argue if you're really scalping, and man, you're gonna make a killing if that's the case. If you are able to find something like this with a long wick, you're gonna make a lot of money. Here's your stop loss. The entry is the breakdown of the floor of the house, but we're gonna build it from the top down. First, I want you to get familiar with the roofs, because anywhere here, for example, you don't see that. You don't see that at all. The most important thing is to go from the swing that has a distance. I'll show you how a scalp will look different from, for example, the ones that I'm marking right now are scalps. I'll show you something else in just a moment. But let's keep going. The structure is starting to look like we're getting the bigger the house. Now it has to have some sort of a degree. It cannot be flat. It is basically the structure of a high followed by a sweep, which always ends up with a wick, which is why I started talking about wicks as areas of stop loss placement, but this is just to visualize what that looks like. Now your entry on this candle would have been right here. That's a big boy. The bigger the house, the bigger the reward. So don't worry if it's like all the way here and your stop loss is here. You're going to get your 1R from the stop to your entry on this candle. You're exiting right here. This is 1R very quickly. So I would like to continue to draw your attention to this and say that over here now trend lines for trend runner is going to be the same. Now you could technically say this is it, but you can extend it all the way here if you move. So if we keep going back, let me show you some other thing. Let's just say that we're looking at this here. Yeah. We don't have anywhere here. We don't have a structure where this house would not be a thing. So for example, over here, if you were to look at how this is structured, this is ridiculous because this is not like this is forcing. This is like, this is not a house. It's a trend that's going like this. So once we are able to identify the house of MarketSpy in this manner, for example, over here, right? Now you can say something like, if I'm able to do this, where's the low here? Not possible, not valid, because this is not a house anymore. This is like some weird corner, and that's just forcing it. So it has to have like a nice little cap, a nice roof structure. Also, from over here to over here, you actually don't have anything that would resemble a house that would maybe go like this. So if you don't get this, you can't really connect it to anything. So you're gonna miss out on moves, but when you see the house, you're gonna profit from it. Over here also, for example, here there's absolutely nothing that I can. I mean, there's not even. We don't have a point to connect this roof to. There is no roof over here. Now you can argue maybe this candle, possibly, but then possibly all you need is a lower high, and you put the point at a swing high over here. But this is a choppy. I would skip all this personally, and instead look for a long setup. At the bottom. So basically, this is a very, very clear, sophisticated way of finding divergences without looking at oscillators. Now, let me explain. For example, here and here, you don't have a V shape. Now, a divergence on the oscillator looks like price is doing this, but the oscillator is maybe doing this. And so you have your divergence, but in order for this divergence to be true, you need to house it within the structure where the candle goes like this, comes back up, drops another, and now posts a high. So now this is your stop loss, and this is your entry to go high. This entry would have to be correlated with your 50% retracement using Prada. So now you're using the house of MarketSpy and the house of Prada to get you an entry. Over here, relative to this price action, we don't really have it because this wick would have been lower. You can of course force something like this and say like, well, I can do this basically, and if price closes over here, perhaps I can get into an entry over here, but I'm going to wait for this to pull back 50%, see if it bounces, and go back and make some profit. So very nice setup overall. This is what it looks like. The best way to do this is to practice and to find these charts on your actual whatever it is that you're trading. So remember, we're on a 5-minute chart. On lower time frames, this would happen as well, but you would have something like this. Valid. This is a correct, valid setup. The floor would be the break of the previous candle, because that's what makes the house, basically. It would be right here. And now the entry could have been a bit better, but you could definitely short this, put a stop loss right here, and still get your 1R. As we can see, from here to here, your entry anywhere here would have been still profitable by 1R. Two things to note. This definitely helps. This definitely helps if you understand that wicks, they're safe, but on reversals, the best traders are positioned inside of wicks. The late participants, I wouldn't say best, I'm just saying the early, there's a lot of liquidity on the wicks. So price will always come back for the wick. So if you have a long wick, it can hold, but once that initial group of traders here, once they start selling on lower highs, once they start selling, price is going to come back for the wicks. This is why yesterday I said 106,500 is an area on the weekly chart where we have to take out those wicks, because that's where the liquidity is. So if we think about liquidity as waves, waves can only travel through something that is physically that looks like this. So the wick, that's where the liquidity is. The wick, that's where the liquidity is. So price will always come back for the wicks. The bodies, oftentimes we just run right through them because it's not as dense. The wicks are actually, they look small, but there's actually more people on the wicks as the initial buyers and sellers of the auction. They're found in there. So and these patterns, they keep going on as long as you have, they're specific, but as long as you have some basic structure for a setup like this, you can kind of like see, if you squint your eyes a little bit, how the house looks like. Now this wick over here, right, and the lows of these candles, that would be your break basically. How deep do you draw the house, right? Like that's another question. It doesn't really matter, because as long as your stop is here, you can be entering here, here, or here, and you're looking for that 1R risk to reward ratio. Now I cannot do the same, for example, for price that keeps going up, like for example over here, right? And we're not able to draw a house. If price makes a swing high over here, and I don't really see that, like this is higher. This red candle is higher than this one, so that we cannot draw anything here. This breaks the roof. There is no roof here, so it has to be, the roof has to end on the red candle, and we don't have the structure for it over here. Now if you look over here on this thing, from here to here on the red candle, we have a little bit of a roof. Now it's tiny, but remember, on 1 minute it's quite huge. There's a clear, distinct gap right there. Where was it? Let's find it. There it is. And we're being supported by so once we have that pullback, initial pullback, there's plenty of opportunities for you to enter. It just looks like there's a straight red candle on higher time frames and you're not getting an entry, but there's plenty of them right here. And all you have to do is wait for the low. Now in this sequence over here on this rise up, look, high, 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 high. Each one of these red candles lacking a wick and doesn't have the structure for us to go short over here until we get all the way up to here. We for the first time start seeing, even over here, if you were to really zoom in over here, you don't have a structure over here for a short setup at all. So until you get up to here, you have a little bit of space. The symmetry starts to show, and then you're like, okay, we're losing some momentum here. We're in the red. There's no way you're recovering back to the green over here. If we were to use DSR, for example, turn this on and be like, yeah, we're literally like at resistance over here, lose the trailing steps, and most likely going to break the support and go lower. And so we do. And so that's your basic house of MarketSpy play. So these are the hidden divergences that nobody knows about. Something that these indicators cannot keep up with due to the lag. By the way, in the next update of DSR, we brought the safety moving averages back in, and it was a fan favorite back in the day, and I removed it just because people were complaining that it's spaghetti. But these days I'm like, you know what? Screw them. Oh, they don't like it. It's too spaghetti. It was amazing. It held price. It gave us so for example, if you went add an alert over here, you would instantly see that we have bullish and bearish when price is above or below these moving averages. So on higher time frames, once you pop above the safety MAs, the Skittles, that's it, it's on. So it's very effective. And so another thing to watch for is, so for example here, let me show you here. So if you were to use this wick right here, so this reversal, there's no way to catch it because there's no retracement for the inverted house of MarketSpy to play out. Not here and not even here. Even though price went up, we're just looking for quality setups without forcing it. If it's not there, it is not there. We're not touching it. But yesterday, this was a DSR reversal. There's absolutely no divergence here to indicate that we have a house of MarketSpy upside down in order to go up here. None. We could have, at that time, maybe connected it like this. But the red candle here, the wick, the white candle, yours is green, I don't know what colors you use. But the white candle over here would have a wick that is above the previous red candle. It cannot be lower, the lowest candle, to draw the house of MarketSpy. So you can't really do that. You need to have a candle that is higher than the previous red candle. So there's no setup here is what I'm saying. This is why we cannot cherry pick this and choose to trade it this way. But essentially, this is what you're looking for. This is what that looks like. We just touched our trend line. So my house of MarketSpy today was here. Wick. I'll get rid of the trend line. But here's the wick. Here is, we want to see a bounce from the low. You don't need to do this. But for me, to demonstrate that the breakout of the previous low to the upside would indicate that I really do have an inverted house over here. This is something that you will start to see as you keep doing this often. The actual distance, I'm going to get into the depth measurement, but for now, I want you to look for the rooftops and sometimes the chimneys that comes with it. So how do you like it? Tell me if you're able to identify that on your charts. And have fun with it, because here, once I have that house, my stop loss is here. And as long as we stay above the stop loss, I saw that we bounced and posted a relative higher low. There might be a divergence. The reason why it's called the invisible divergence is because it's happening on some sort of time frame, maybe 1 hour. Let's go to 1 hour. Yeah. Here's 1 hour. Here's the deeper, higher house of MarketSpy right here. We can expect price to fluctuate here at, so imagine this zone here, we're going to be now carving it out over here. And this is going to shock a lot of people, but price can start moving like this and create the same breadth of the market as we have over here between the wicks. And I wouldn't be surprised if it does that. And on, yeah, so right here on the divergence, you can see how price is on the oscillator, for example, the money flow, the long-term trend flow is starting to push up. Meanwhile, we have this divergence here. So maybe somewhere, it's none of my business where that is happening, but we have that structure where we have the inverted house of MarketSpy. And once we broke above that, I simply looked at ARMA on my 15, and I said, we're going to reclaim that baseline on 15, and on 5, we already have. And as soon as we went green over here, I said it's going to retrace, possibly go up a little bit. And that my window is somewhere around here. And so this is what you need to catch or be able to catch every single day. You turn on indicators last moment once you do this manual recon. That's what I recommend you guys search for. Right, back to Prada. From here to the high, it looks like we picked up a little bit. So this would have been 50%. Look how inaccurate this is, because you're always tracing. Most people would advise you to trace it as it keeps posting high. The problem is you're moving this thing and you're not creating a 50% gap. It's mathematically skewed now. It is the first move of the daily session that is going to give you the accurate signals, my friends. This is why I said there's many ways to draw it, but there's only one true house of Prada way to do it, and this is it. Take out the wicks, liquidity, the low, watch it continue to hold. I mean, I'm streaming. This is why I don't like to be doing this, because I could have easily profited from this just now. But I have to lock in, I have to meditate, I have to drink tea to slow down time. My house of MarketSpy right here. Not subjective, it is very objective. If it's there, it's there. For example, over here, the lows, you don't have a house, you have a continuation. You literally don't have anything over here to suggest that this is going to continue falling lower. So, there you have it. Any questions? NQ? What did I say about NQ? Do you see my line? Let me just take NQ. I don't know if my guys understand this. I don't know where the traders are on Discord. You guys, we need to have this conversation, right? Check my post on Discord about NQ before my post was over here. I drew this line going up and I said from here we're going to reverse. Why? Oh man. This was the break of this and this. People who are long NQ, I feel sorry for them because they're not part of the Discord or they're not checking in. I don't know if they're trading this. But every time you see me post something like this, you know, now the orb is below. It can fluctuate, it can go around here, but we're going down. And I don't think people realize that because they think it's only up from here, up and away. It's going down. Not only is it closing this gap over here, it's going down to 25,728 within the next few days. Not only is it closing this gap, it is actually going lower than that to retest the previous breakout high over at 25,383. So far, my call on NQ from the top over here, let's be conservative, let's say here, yielded almost a 2% drop. If I include this, it will be 2%. But the thing is, this is happening now because we're gapping up, down. We actually made the low based on this candle here. So that was a 2% drop. And can we actually do the house of MarketSpy? Can you see it? I want you to open your NQ charts and tell me if you see the house of MarketSpy here. The little chimney. Currently, it would look like this is a 4-hour time frame. So what does 4 hour mean? 4 hour means you're going to have much deeper structures like this, for example, right? This is what it looks like technically. But your stop is at the peak and you're just short below this candle right here, which indicated where the peak was. How does that look like on 15 from the top? I'll show you. Cannot draw it here, cannot draw it here, cannot draw it here. Long wick. Kind of messed up, but it's still there. It is not the only pattern. You look at your indications over here and say, yeah, can we do this? So when we dropped over here, once again, this is a 1 hour trade. So just zoom out a little bit and understand that you're very early regardless. So from where the stop loss would have been to the break of the peak, which is right here, where your entry would have been. So this is your entry. You get your 1 hour with the stop loss right here. And the reason why I always preach 1 hour is because to find good quality setups that all the big traders and algorithms do also, if they take quick profits, then we should too. And holding it, sometimes it works. So my recommendation is get in on these trades every time. As price moves away from your entry point, put a break-even stop loss. Now you see this candle right here? It would have taken you out. But you try again and again and again. As for the retracement level from here to here, it seems that, again, this is a technical 50% retracement, which everybody else does. What we do is we see that price retraced over here. This is the liquidity area. Again, if you had your market profile, it would look like this with a line. Same thing. And look what you're getting using this method. It's all about knowing where to do it. Now, if you want, you can drop a chart for me in Discord and be like, hey, am I throwing this right? And I'm like, nah, adjust it. For example, it shouldn't start at the bottom here or at the bottom here. Ideally, it should be aligned with a market profile. So some profile person would come in, or the order book person would come in and say, yeah, all the orders are stacked over here. Guys, we're all looking at the exact same thing. I'm just simplifying the overly technical dinosaur concepts that have existed forever and is up for interpretation. This is a golden standard, and MarketSpy is something that I want everybody to trade symmetrically, universally. So in this case, if we take the candle, and we're always looking for a significant move, again, the house of MarketSpy, and you don't do anything over here unless you have an indicator like MarketSpy. Again, here you have a reclaim, you have a candle retest, you have strong continuation. Sure, you're trading this, you're like, fine, I can participate here. But for most other people who just want a sure shot setups, remember, the longer you wait, listen to this, the longer you wait, the more exhaustion that you're getting with price, which leaves you with zero competition, almost. The more frequent you are with these trades, the more crowded it is and the more uncertain and the likelihood. So between here, this is why I said, like between here and here, for example, we have 1 day and 1 hour. So this lasts a whole day. But within this distance, at half a day, price went down and went up the same distance. So basically, that tells me that in a day, there's only 2 or 3 windows of opportunity at any given time. And if at one point it starts to feel like you're forcing these trades, that you're saying like, yeah, I saw that, but I saw the MarketSpy print that Max 7 at the bottom, baseline retest, but I feel like I can scrape the top a little bit, forget it. Go Prada level mode. Set it up and wait for this thing to fail at it. Then look at your momentum and say, do I have anything to back me up to go low? And I think you would need like this one candle where you can leverage the heck up with like 10 NQ, 20 NQ contracts. I don't trade MNQ even for prop firm. I don't got time to be properly managing my risk. I go balls deep where I need to pass the evaluation in 3 clicks. And so in order for me to do that, I need to skip most trading days but I watch the charts every day. I watch them every day and I wait for either a house of MarketSpy, a Prada setup, and then I confirm it with my indicators with MarketSpy and see if we have something in there. I need that level where everybody is tired and they want to go home. And that level is here, here, here. So then you're like, okay, can we do something like this? This is a swing low and we go to the swing high. Price held over here. Look, but it went up just a little bit to where? It went up to the 50%. So once the initial move has completed, you can Prada your way out by trading like one candle between these levels, like so. Some people like to keep them. Once it's played out, I get rid of them. It looks pretty and I can prove myself to others and be like, I'm the greatest chartist in the world. But what's the point? I just want to make some money and go home. No, actually, I don't want to go home. It's too much noise. And so you can see 50% retracement, but it has to be the liquidity levels. Back in the day, I talked about this concept. This is not new. I just didn't have a way to express it universally. So I would say if you have a bundle of candles and you have the impulse point, price always comes back to the impulse point. You see a bundle of candles here, price is going to come back to this impulse point. This is your volume profile in the making. Today, NQ is going to go here, okay? So that's how you do it. But in terms of looking for the house, maybe wider areas like this, understand that on the oscillator, there's this thing like that. There's a divergence, maybe. Now look at this, price is going up, this oscillator is going down. We have a final spike, the chimney, so we can maybe use that. And the next red candle is over here. It breaks below this candle, which, that's a great entry in itself. And then your stop is here and your exit is at 1R before a reversal. If you don't take profit at 1R, I guarantee you'll be breaking even forever. So just take your profit and find the next setup. Like I said, for most other people, it would be next to impossible to have a sure system like this where they're like, okay, we're not stingy, we're not greedy, we get plenty of opportunities. You just have to wait. I spend a huge amount of time looking at these charts, but I only execute once. And if I miss a move like this, I completely lose interest, because the 50% Prada retracement is their top of the line bag that is 50% off at Dubai shopping mall, and you just missed the opportunity to scoop it up on the cheap and sell it at a premium on the second-hand market. You know what I mean? That's how you look at these things. So what are we gonna do now? We're gonna wait. There's no set. Well, there's maybe a setup developing here, maybe, but we need a wick. We don't have it. This is a red candle. We could arguably say that there's a house here, and the stop loss would be very tight. But we need a wick on the candle, at least something visible, in order for it to be true. So may not work. And then you have the right to be skeptical. May not work immediately. It doesn't really matter. The structure is one candle is like this, one candle is like this, the other candle is whatever. But as long as it's lower than this candle, that means the trend is coming to an end. You want to be early. 1, 2, 3. You want that house. You want to get that entry. You want to put a stop at the peak and watch price start posting lower highs. And this is what I call simple, without having to promote the indicators or anything like that. Anybody can pick this up. And it's not that there's better or worse ways. If this clicks and you're able to find some profitable setups, just don't force them. Give them time. Use Prada levels. Then my job is done. Then I have helped a few people to become a little bit more present in the markets so they can make the right decision when it comes to these things. So there you have it. Trend runner. So Travis, excellent question. So one more thing, ATR is, for example, it would look like this. So the current ATR would be indicated by this thing. And it's at the top. It's 237 points. So that means like whatever my entry is, my stop. So a lot of professional firms, they use ATR to gauge volatility. This is a very basic form of it, but it works. Okay, it's nothing too complicated. 237 times 1.5 is where the stop loss would be. It's actually illustrated by using show ATR bands, so we can see that a little bit better. So let's say you have a setup right now, and it's looking like it's bullish. It's coming up, and this pink line is your 1.5 ATR setup. It means that where the candle is to where the candle is here, that's 329 points. Current 1x ATR, true ATR, is 237, right? So this is times 1.5, which is this ATR of this range. So what this means, I mean, it's already made it. So right now, 237 ATR would be right here. So essentially, your exit point would look like it's here. So we use that to understand like what is there. Is there anything in the way? So we have to sweep the previous high over here. That would be one of the confluences. We have stops and liquidity on these tiny little wicks. ATR would indicate our exit being at this number of points. On NQ, for example, if you go to NQ and you bring in if we check ATR, it's 28 points. So that means this candle, each one of these candles on average moves by 28 points in the last 14 periods, 14 candles. So instead of holding a trade for 125 points, as scalpers, we say, I can get 28 guarantee on momentum. So for example, once I have a setup and I have long, I can over leverage, exit 90% of it on ATR at 28 points once we have a setup, right? Not just randomly that if it's going down. So this little plus sign is showing you where that ATR point is currently. So you can kind of use it to look relative to the previous candles and be like, yeah, well, this is can we make that distance? In excess of ATR, a candle like this that exceeds ATR is usually not sustainable. And then we start chopping and reversing and suppressing volatility. And so compression happens and then we have expansion again. And so it goes on like this. But ATR, average true range, is basically the size of the current candle. And if the setup is good, if it's there, if the directionality has been established, then we can assume that the next candle will be the equivalent size of the previous candle or more. So forward candles can be expected to be 28 points each or more. And so that's why they refer to exiting at 1x ATR, 2x ATR, 3x ATR, things like that. Or your entry tolerance at 0.2 ATR. So for example, if price deviates from the baseline in excess, so on Armageddon here, in excess of 1.5 ATR, you get a diamond. That means price is far enough from the baseline to be in a valid downtrend continuation. When price is close to the baseline, the diamonds disappear. You're within the ATR range to look for an entry, because your ATR is so small. Now, once you're away by 1.5 ATR, that means that the train is gone. It's in excess. So here we get our Prada level, which is at about here. ATR very close to it. Maybe we can have an entry, but instead of having an entry against what price is doing and fighting the trend, we need for it to exhaust to give us some sort of indication. And I think this nasty yellow X is a pretty darn good indication showing us what is to come. And so at which point, you can buy a pyramid later on for a trade, but scalping this becomes very enjoyable once you understand that you need one candle directionally to make your daily profit and step away. So I think if you can secure $200, $300 a day, not risking too much, but just enough on these profitable setups a day, right? So that means you skip 90% of these setups, no matter how good the MarketSpy looks and how many bullish setups it prints, how many take profit points. Like, look at this. We close down below here at the breakout level, and this is your entry to take profit over here, 1 hour. This stop loss has already been taken out. Like ODB said, you get taken out. So it got taken out over here. Look. I like it raw. And it gives you the raw. Look at that. Breakout is right here. So this is what I mean. Indications like this, you're like, yeah, Great entry point. Still no diamonds. Good entry, good entry, good entry, good entry, good entry. Right here, still no diamonds. Right here, there's a missing tooth right here. This is the breakout point. So this candle says you're close enough to the baseline to get an entry. The next one, you're already making money. You're not chasing these diamonds. You're holding it until these diamonds disappear. Once this price gets close to the baseline and this diamond disappears, that's your exit signal. That means you're getting close to the 1.5 ATR value, which means the candle is contracting, compressing, and we're due for a reversal. That's how you read this. But you don't have to play all this. You see a signal, you don't have to hold for it. You can, but you say, okay, stop loss, taken out, pyramid pushing price down, breakout over here. Maybe I can size up and get into this one candle. You size up, you know, you have your momentum. This is hard to reverse. And so maybe all you need is this one candle or two candles, which is worth about 25 points, which is close to what the ATR is now. Now you look at your panel over here. Currently you have like a little Christmas tree floating, but you know, these days we have a panel on MarketSpy Armageddon. And it's all bearish, and you're like, yeah, this is great. Not the case when it's choppy like this and the white candles are like white cancer cells. I stay away from them until we have some resolution, some sort of, you know, clarity, right? So, yeah, we better not lose this white line over here. That's our value line. Below that, you're below the true value of the last 700 days. This is not looking good for NQ. I don't know what Bitcoin is up to, but it's looking like it's creeping up to that ATR value still. I don't know if it's gonna make it, but supporting evidence that it might sweep this, but we're in a bearish momentum, so who knows. Anyways, that's how you interpret ATR, and that's simply the average size of the candle. This is the point of the 1% club, where you risk 1%, look for a 1% setup, take 1%, exit at 1%, and make 1%. And so it's good to have some sort of baseline, some discipline to stick to. I hate the word discipline. Discipline is, it's like, you know, you're not really lacking it. You're lacking clarity in terms of what needs to be done. Because you can be disciplined sitting at the... Listen, when you're making money, discipline is so easy. You get up in the morning, you run to the charts and you're like, let me see if we have anything there. That's how I feel, you know, and I just sit there and I wait. I chew on my pistachios, dip them in honey, manuka, and I slow down time by brewing Gong Fu tea, Chinese sorts of tea. I've developed quite an expensive taste for these teas, so all my profits go into, so please donate. My caffeine comes from tea. But anyways, guys, hopefully that helped. This is the house of MarketSpy. Undisputable chart patterns that you should only focus on them when you are in a range or when you're peaking at the top, where you just get that feeling that maybe I should start looking. If DSR has some sort of a resistance, for example, right? Like your 4 hours, there you go. That's what I mean. You profited from the ATR hit. We just cleared it. And that, if this candle goes really high, like this candle, it's called an excess of the ATR value, and it's not sustainable, and most likely you're going to have a reversal at that point. So, but yeah, we have 1 demand candle, 2 demand candle, 3 demand candle, 4 demand candle. Right now, I'm seeing that bulls are taking over the game right now. So I don't know what bears are gonna do once we bounce on this weekly support line and go to 114 over here, or 110 for a start, right? I don't know what bears are gonna do, man. I know what I'm gonna do. I'm gonna blend in with the crowd. See, I say the market is smart and the people on Twitter are smart. If everyone is buying, me too. I'm buying. I don't want to be a contrarian. That's silly. you follow where the flow of the money is, and so if you see the books are ripping and everybody's bidding and Bitcoin is bid, you're bidding too, but not just randomly because everybody else is, but like you wait for these kind of setups. This Prada is man, first chart setup over here, second over here, third over here, 3 opportunities. This is what I mean. From this point forward, whatever price does now, going forward is not of my interest. I will come back to maybe New York session because I know that there's going to be like people pouncing on this. It's Monday. But for the most part, we're done. You make your money with the sun rises out here in Asia. You scrape the market, you get a little bit of that money, and you go home. The job is not to lose anything, and entries don't matter, stop losses don't matter. The point is to not overtrade. Like skip it. One of the best, actually algorithmically proven strategies that quantum physicists include in their algorithms is what's called a cool-off period. Now you might want to look into that. A cool-off period is used to apply smoothing to space between signals, so that if you have, for example, 1 pyramid, 2, 3, 4, it is quite foolish to think that if one of them played in your favor, that there's so much strength for the other pyramids. That's why you have pyramids that are at the bottom that you should be buying, that are going up, or midway pyramids that are like retracing to, oh my God, a pyramid that goes into Prada, and it's a pyramid, like you're not buying that, you're buying that. And so, for example, you have your Prada level, 50% of the recent retracement move. Very early, by the way. You don't wait for it to rip like by $3,000 and then you start drawing your levels, because that's just too heavy. The market can get too heavy. Right in the beginning, where it's uncertain, like this. Look at this setup right here. Right in the beginning. Once you do that, how you can smooth this out is apply a cool-off period. Now, your cool-off period could be based on time, using sessions, or distance between candles, or the actual number of candles. So if I look for symmetry between these gaps, let's say there's a little bubble over here, there's a little bubble over here, there's a little bubble over here. I want, before my next move, like this is developing, I want another bubble over here. So I want price to do whatever it's gonna do before I start looking for my next setup. And this is only within a range. Remember, we're pumping back up based on speculation that this range is the bottom of this weekly setup. And Bitcoin, I love it because it's gonna annoy a lot of people by chopping. They're like, oh, breakdown. Whoops, it goes back to 118. And guess what? We as market spies, we have to be ready for that. We don't really care. We're watching these levels just like the rest of them, but you know, we're just waiting for. So my cool-off period is skipping a few of these bubbles. If I see that at the start of the day I missed my first or the second bubble, but the symmetry here would be something like this, where you have to. So to help you with this, there's a nifty tool which is fitting the data. It's better to eyeball this, to be honest. But there's a nifty tool over here called time cycles. And what you can do is you can use them to approximate. Use the wicks, these huge wicks over here. Use them to understand the cool-off period. Yeah, like how long that would approximately take. And you notice that somewhere at midpoint, that's when things start to exhaust. So the bigger the bubble, the bigger the cool-off period that you need. And so for me, that's a couple of hours in a day. Totally mechanical, but like right now we hit that ATR and we're already coming down. So skip here. The next support line, Prada, by the way, Prada is able to be tested 2 times, maybe 3 at most, just like with the pyramids, just like with the Max 7s, just like with anything else. Remember the golden holy trinity. The 3 is what you need to, is how you build your discipline around. It's you say the power of 3. Okay, it's always the 3. The 3 is like a magic number. Okay, so it may not be true, but you make it true, and you say, I made 3 my rule, and that's your rule. For candle suppression, for example, and congestion, I technically use 5 candles that are not moving like sideways. I know that's a sign of exhaustion, because if within the next 5 hours you're still here and you're not going up or down, and you're at the top, I know you're going down. If you're at the bottom and you're congested, and I look at compression and I see that you're about to rip, then, well, I know that you're about to rip, because 5 candles and there's no decision, there's no hunger in the market. So the cool-off period here gives you time to wait between sessions. And in combination with your Prada levels, House of MarketSpy, and the cool-off period, you can then start using indicators for more precision based on these general overall levels that kind of give you an understanding of what might come next. But if this level has been bought 2 times, we should expect price to keep ripping today. If not, when this level breaks, I'll show you what's going to happen. If this level breaks and we're not able to, we're going to do this, and then we go lower. And the reason why we're going to go lower, I'll turn on DSR. We will have broken our support floor. This is precisely what is going to happen if we don't continue rising from this Prada level today and forever up into tomorrow. This is what's going to happen next, at which point Bitcoin will have officially entered a bearish retracement towards our yearly end of year retracement to 994,000. It's great news because we understand and we're easy about it. It's bad news for bag holders or people who are still hoping for 140 or whatever. Doesn't really matter. Macro and like the system flips, this can flip. We'll just go with it tomorrow. But right now, keep this imprint in your mind and say, like, if this fails and we come here, it's going to be a very slow, sort of creepy, you know, take out the low, go back up again, take out this low, reject, go back up again. But ultimately, this is bad. And yeah, 100K retest. If this doesn't hold, look at that. But right now, bears need to worry because, you know, bulls, they smelled the blood. We're in the blood area right here. Sailor is buying, so I guess it's going to go up, right? Thank you guys for watching. I hope you learned something here. This video might be banned, demonetized, or hidden in some countries or globally because I was playing some my favorite DJ Yuna from South Korea, and she's rocking that cyberpunk minimal techno, perfect for day trading, to catch pumps. So thank you for lending me your content, Yuna. Too bad no one's gonna see this because it's a live stream and not a video, but hopefully the few of you who are here, you learned something, and thank you for sticking around, soldier. This is Prophet Platoon X Cryptopocalypse Now, which was so hard to pronounce. I gave up on it. One love, guys. Make some money out there, and if you have any questions, just reach out and get that conversation going within Discord, and show me what you're looking at. You never know, I might give you a nugget that that may change your outcome. But I'm sure you know what you're doing, and so I just wish you all the best, all the good energy, much strength and endurance, and let's get it. So I'll see you guys soon. It's been a long stream, actually. We did really good today. A few hours, and Yeah, Trend Runner. Make sure to ping me in Discord, and I'll get you to. I'll need your trading view name, but I think I can find that through the MarketSpy website if you're registered. If not, just send me your trading view name, and I'll publish it for you guys. Trend Runner is going to be interesting. Let's take a look at what that looks like, by the way. I don't know if it makes sense to you, but this basically the concept of the House of MarketSpy, breakout, retest. Every time you have a breakout on CPR, any level, it will be retested with a 50% retrace. That's why Prada works. You have your breakout over here, over here, over here. So right now, they're showing us that we're supposed to be going down, but we're breaking out. So the way I use it, right, just to prepare you for what's to come, is you don't want to be necessarily holding it short like this, but you want to wait for when price interacts with it and has a breakout, because it's better. Once you have a breakout, it's most likely going to be sustained. You're being supported by these gray lines are invalidated, not yet validated lines. So they're saying that the structure is not necessarily confirmed yet, because it's expecting at least maybe one more retest, and that's in the parameters. You can actually tell it. You can increase the how many bars that it scans for. I usually normally leave it at 4, but if I want some precision, I bring it down to 1. And this is what 1 does. Breakouts, retests, as you can see. Oh my God. It's like a nightlight laser show. But it's so invisible. The sell signal would be the break of this trend line, for sure, with your previous visible candle as a stop loss. So for example, right here, but it happens really fast when you have those breaks of these trend lines. But again, with the confluence, if this is rising, don't expect this thing to continue falling. Momentum shows you the direction over here. This fall over here, no way you could overcome all of these. I told you on the 30, if you were to before this fall, it was somewhere. Now, look at this. Right now being support. So as soon as we lose this trend line, she's going down accordingly. So by that time, maybe you can do the House of MarketSpy thing. Ah, it's already there. Sorry, I thought I saw it. So you can do that, and then boom, you have it. See that? And it's going to be retesting these levels and consolidating here, rejecting, and so forming some sort of a pattern here, squeeze pattern, maybe like this, or maybe it'll hold and it'll go down and do its thing. But it's very helpful, not traditional like the others. So I think you'll really enjoy it. All right, guys, see you soon. I'm gonna sign off. Another profitable day. I got my $700 today, and I don't really need much, but it is something that I demonstrate within realistic parameters of people having $50,000 and plus dollars. This is what you can expect. If you have less than that, maybe $100 would be really good on a 10K account. Tight, difficult, but 50, 70, 100 is possible if you look for these setups only. I believe that you can get away with it, and it's nice practice plus supplementary income that you can enjoy using to enjoy life. Be grateful for what the market gives. Stay hydrated, never liquidate it. What can I say? I'll see you guys soon. Cheers.